All right, today we are jumping into the anatomy of a stock with one of the absolute wildest charts you will ever see, CJET Motor Company, ticker CJET. We're going to play detective and follow the clues in its data that try and make sense of some truly extreme volatility.
So, just to set the stage for how chaotic this has been, look at this number. From its recent low all the way to its peak, CJ Rocket rocketed up an incredible 1,247%. I mean, a move like that just begs the question, what on earth is going on here?
To even begin to understand this, we need to map out the timeline. Sort of lay out the scene of the crime, so to speak. We're going to walk through this stock's absolute roller coaster of a journey.
And the story is wow. It kicks off in early July at just over $2 a share. By the middle of the month, it hits a peak of $2.72, and then the bottom completely falls out. By mid-September, it's trading for just 7 cents. 7. But just when you think it's dead and buried, it stages this massive rebound rally all the way back to 50 cents. It's just pure, unadulterated chaos.
So, how do we even start to get a handle on these insane price swings? Well, our first and maybe most important clue is to just follow the money. And in the stock market, that means one thing: looking at the trading volume.
The sheer scale of what's been happening here is what really jumps out. On a totally normal day, about 95 million shares of CJET get traded. But during this recent surge, over 1.2 billion shares were changing hands. That's not just a little busy. That is more than 10 times the normal activity. It's a massive flashing light that something very unusual is going on.
And right here, the connection gets crystal clear. That epic crash down to 7 cents, it happened on volume of 1.7 billion shares. And the recent surge back up to 50 cents, 1.2 billion shares. These aren't quiet, slow-moving shifts. These are intense, explosive events that are being driven by an absolute flood of trading. So, the first big conclusion from our investigation is this: all the evidence points overwhelmingly to trader activity, just huge amounts of buying and selling as the engine behind this volatility. This isn't about some fundamental change or big news from the company itself.
Okay, let's move on to our next clue. We're going to look at the stock's trend, and this is where we uncover a really deep and fascinating conflict hiding in the data.
So you've got this split personality. On one hand, the short-term story looks pretty good. The key moving averages, which track the price over just the last few days, are sitting below the current price. That's a good sign. It's like a tailwind pushing it up. But then, you zoom out, and the long-term story is, well, it's bleak. The 50-day and 200-day averages are way, way up there, confirming that despite this recent rally, the stock is still stuck in a major downtrend.
This is such a great way to put it. The stock is having a fantastic day, maybe even a fantastic week. It feels energetic, but its overall long-term reputation, according to the chart, it's still in pretty bad shape. And that conflict is absolutely key to understanding the risk hit.
This tension between the short-term party and the long-term reality brings us to a really crucial idea in trading: mean reversion. It's basically financial gravity. It's the theory that a price that strays too far from its average will eventually, inevitably, get pulled back. So just how far has CJ strayed from its own average? Well, according to the data, it's deviated by a mind-boggling negative 825%. A number like that just highlights how incredibly stretched this recent rally is. That gravitational pull, it's likely to be incredibly strong.
Okay, let's get a little more technical for a second and look at the dashboard of warning lights. What are the specific indicators actually telling us at this very moment?
And this is where it gets really tricky, because we are getting deeply conflicting signals. The Relative Strength Index, or RSI, which measures price momentum, is saying the stock is oversold. That suggests a bounce could be coming. But at the exact same time, the Money Flow Index, or MFI, is way up at 95.7. That's a signal of so much buying pressure that the rally could just be totally exhausted and ready to top out. So the main point here is that the technical clues are literally arguing with each other. One part of the dashboard is suggesting the stock is ready to take off, while another part is flashing a giant warning sign that this buying frenzy can't last. It just deepens the mystery and cranks up the uncertainty.
So now, let's put all these clues together for the final verdict. What does all this volatility, all this volume, and all this conflicting data actually mean for the risk of trading this stock right now?
This lays out the current risk profile perfectly. The price is hovering around 50 cents. The next big ceiling, what we call a resistance level, is up at 66 cents. But the next major floor, the support level, is all the way down at 15 cents. This creates what analysts call asymmetric risk.
And here's that risk boiled down to one stark number. The drop from where the price is now to that next level of support is over 70%. The potential reward to get to the next resistance level is just so much smaller than the potential downside.
So based on all this evidence, the analysis points to three main ways this could go. The bullish path is that this massive volume keeps up and pushes the price higher. The bearish path is that the rally runs out of steam and triggers a super fast decline. And the neutral case? The stock just kind of chops around sideways as all this crazy energy finally fades.
And this brings us right to the analyst's final cautionary takeaway. This stock is in a very, very delicate and risky spot. Its fate isn't being decided by the health of the business, but by these huge, sharp, unpredictable moves driven purely by traders.
Which leaves us with the final question that really sums this whole thing up. With its massive volatility and all these conflicting signals, is CJET a high-risk gamble that's on the verge of another collapse, or is it a coiled spring getting ready for its next big move? The data we've looked at today suggests that, for now, it's a puzzle probably best watched from the sidelines.